The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Easy Money New England.
Oh, can somebody help us here?
We can, because we are real estate and mortgage professionals.
Where you go? It says come in and browse.
That's right. Come on in, listen up, and learn.
How long do you intend to browse?
In a short period of time, our panel will teach you some tricks that might make your house buying easier.
You don't ask her how long she intends to browse.
You might not be looking for a mortgage today, but we'll get you ready.
You don't look like browsers.
Are you looking?
No, what do browsers look like?
Yeah, maybe I'm half browse.
On his father's side.
This is Easy Money New England
Let's show the lady we're browse.
with your host, Brian Damico.
Hey, look at us, we're browse. One more word out of you and he gets it, all right? Come on.
Hello, everybody, and welcome to our show, Easy Money New England, where we like to say that there's no such thing as easy money. If you have any ideas to how to make easy money, please send it to us. But Easy Money New England. So, every week we bring you either money-saving tips or money-making opportunities all around the areas of real estate, the real estate industry. And today with us, we have James Khoury. James Khoury is an expert when it comes to 203K financing FHA loans. He also does FHA loans as well as conventional loans. He's been in the business a long time. He's with New Fed Mortgage, and for all these regulation folks, NMLS number 1881, James Khoury's license number 50872, and mine 2044. I'm sorry, 20400. So with that, James is located in Salem, New Hampshire, and does much of his business in the states of New Hampshire and Massachusetts. And when I tell you, I've known James a long time, he's very passionate about what he does, and he's definitely one of the best around that I know of, for sure. So with further ado, James, welcome to the show.
Hey, thanks for having me, Brian. I appreciate it.
Yeah, so James, I know that you're, before we get into the nitty-gritty of 203K financing, I know you've been doing a lot of marketing lately.
I do, yep.
And I see you on Instagram and Facebook. What else is
Facebook, Instagram, Snapchat, everything the millennials like.
Yeah, I'm not a millennial, so
neither am I technically. So I just missed the cut.
All right, well, before we're going to jump into financing, right? So, if I'm a first-time buyer, I always, the questions I always get from consumers is, is there a first-time home buyer program? And we have different state, types of mortgages, but really, it's, if you're looking in the market today, there's not a lot of homes for sale that are affordable that don't need work.
Oh, correct. Especially in this market today. The market, as you know, more than anybody, it's crazy. So in order for you to get that property that needs, you want that sweet deal, so to speak, it's going to need work. No matter what. I mean, otherwise, you're going to pay above asking price in a lot of cases that we've seen, especially through this past summer. So this is why that 203K loan is ideal for some of these first-time home buyers or anybody in general.
So 203K loan, all that stands for really is it's an FHA loan, and they call it 203K rehab financing.
Yep.
And there's two different types of 203K loans, correct?
Yeah, there are. There's this one that's called a streamline. It's under $35,000, and one that's called a full, which is plus $35,000.
Okay, so if you have a home out there and you think you're going to put around $35,000 or less into the property, you can do what's called a streamline, and it just goes a little quicker.
It's quicker. The difference is it's tricky because what happens is you have $35,000 is what they say the number is, but technically the repairs got to be around $31 because there's other things included in that $35,000. So any fees associated with the 203K, any contingency reserves, that's all part of that $35,000. So keep that in mind. The bid itself, or the contractor's bid, if it's 35 or 33, you're already going to be over, quote unquote, the 35,000 threshold.
So it'll be a full, which means then you have to do what in addition to the streamline?
So one of the big variations, other than the money portion of it or the value part of it, is that the full is going to require a HUD inspector to go out there, and that's important because they're going to make sure that that contractor's bid that says this is the total repairs and this is the total cost for labor and everything associated meets what the guidelines are or what the average cost to repair in that specific area for that specific thing that's being repaired.
Right. And just being in the business for a while now, I know that also if it's structural, they would have to go with the full 203K.
full 203K. So even if it's under the
Right.
35,000, the structural damage itself, they're required to go to the full because in that full, the HUD inspector is required no matter what.
No matter what, because it's structural. And what is considered structural? Is the roof considered structural?
No.
No.
No, foundation.
But the foundation, additions,
Yep. Oh, yeah.
anything like that, anything that you get, anything structural.
Yep.
Okay. Okay, great. So down payment.
Yeah. Down payment is the same as an FHA. That's the key part of this is that 3.5% down is going to get you in there. So imagine this. You see this property that is in the great neighborhood that you want, but it's undervalued because it needs significant amount of work. You can still get in there by putting 3.5% down and then getting the repairs you want. So you could essentially have a house at a good value with everything you want done, if it's cosmetic, all updated, at a better price than the house next door potentially.
Right, and I've seen where people just actually went into a home, didn't need much work, but they were able just to put in their appliances.
Yeah.
And, so even if they want extra money just for cosmetic stuff, they can do that. As
Oh
well.
yeah, that's huge. I see that a lot because some of these houses that are underpriced may not need structural damage or roof or siding, but they just need TLC inside. So this is a great product for that. It gets you into that house that essentially could be however you want it inside. New granite, kitchen, everything like that. So it's huge to me, in my opinion, that you're giving someone money to fix the house.
All right, Jonathan.
I do have a question.
Go ahead.
Yeah,
Does the construction loan, does that roll into your mortgage?
it does roll into the mortgage. So once the you have the total amount of the contractor's bid and it's agreed upon and gone through all the channels it needs to, what ends up happening is that total end amount is going to include the cost of acquisition, so the purchase price, plus the total repairs and all the fees associated with it. So yeah, you're making one payment every month. Yeah,
It's easy money.
exactly.
Easy money.
Easy money.
A lot of loan officers, though, they kind of steer clear of this program because either they don't understand it or they think it takes too long. I mean, what are you seeing?
Yeah,
Because a lot of people refer you business inside the business.
Yeah, people at New Fed refer me business. A lot of it is time consumption, and I feel that our team has kind of got it down pat as far as what to expect, the forms that are needed, who needs them. And one of the biggest problems I see as far as delays come with the contractors. Contractors are really busy. We're asking them to fill out a lot of paperwork that's required. So my thing is this. You're asking us to give you a significant amount of money to get you the house that you want to look as good as you want. There's going to be some stipulations to it. Yeah. So a lot of the delays are from the contractor, but we've kind of, having that, we've got a couple that in our local area that have been phenomenal to work with, and we, always, if they ask for a recommendation, we give them 3 or 4 different ones that we know will get the job done, or at least have had 2 or 3K experience, because there is paperwork. You're going to require, besides the paperwork, their liability insurance, proof that they're licensed. So, they can't be related to the borrower. So there are a lot of things on there that, one little step that's behind on that causes that big delay. And then, you go from, a regular closing of a 2 or 3K from 45 to 60. Now you're already in the 60 to 90. So every bit of time is crucial.
So personally, I've done one 2 or 3K loan
Wow.
myself that went smooth. And
Okay.
then I tried it, that was pretty good. And then I tried to do another one. Let me tell you the horror story.
Oh,
So-
I can only imagine.
So what happened was the contractor goes out, looks at the job, says, it's going to come in around $20,000, and then when you get the proposal back, it was well over $35,000. So now you already have it structured based on what he said, but it wasn't in writing, it wasn't a full proposal, and obviously as a mortgage guy, we're trying to get a head start on this. So say, all right, you're going to spend on this? Yes, and then boom, and then the construction guy really didn't qualify or didn't get underwritten the way. What do they ask for from the construction person?
From the licensed contractor?
From the licensed contractor.
So there's probably 15 to 20 pages that sign, an agreement that this is the actual cost of repair. So you're verifying that in writing. The buyer and the contractor agree. Contractor identity of interest, meaning that there's no relationship between them and the parties involved in there. Because remember, this is a federal loan. It's a HUD program, so everything's got to be cut and dry. There's no gray. It's black and white.
And who holds that? Like, how does that construction worker, the general contractor, get paid?
Yep. So this is always the part, and this is why I prefer to work with somebody who's done these before because they get it.
Yeah.
It's probably not for someone who's newer because a lot of the costs up front, you're going to have to wait for the draws to come through. There are what's called draws. So initially you can get the supply list up front, which is a good thing. But then there are draws. So every time something is completed, especially on those full 2 or 3Ks, you're going to have that HUD consultant go out there, check it off, and then say, okay, a draw. So there's a process with that that's important, and we try to explain that up front. So this is why, the issues we've had, say, post-closing, because the closing's gone fine, has been with the contractor not understanding that, even though it's been relayed. So it's really important.
So if a general contractor doesn't understand the process, they may be calling the borrower saying, hey, where's the money? Where's the money?
It's funny. There's someone in our office right now in our branch in Salem that is going through this specifically, where they told everyone up front this is how it works, and now the contractor calls the borrower. So the borrower is literally calling every day asking what, and I've explained it takes several weeks to get that escrow account set up with the end investor, and there's a process to it. So it's unfortunate.
So it's just, it's just important that the contractor understands before he basically, and also follows the guys that he has, he's insured.
Oh yeah, you have to be insured.
Insurance. And
licensed, insured.
You have to be reputable.
Yeah.
You have to be, you have to do your job. And it's like a lot of customers will ask too, well, I want to do this, but can I do the work myself?
Nope. That's a big no-no.
And that's clear, right? And they're always looking for the gray, but no, you can't do the work yourself. It has to be a licensed general contractor. And again, he's pulling the permit with the city.
Oh yeah.
It's on him to make sure that job gets completed.
Oh, absolutely. It's on him. They have to be licensed. There's no way around that at all. No matter what you do, they can't be related. They can't be the borrower themselves, and that's always a big thing. Well, I'm a contractor. Well, that's great. So who do you recommend other than yourself? That's licensed.
Does the loan happen before the house is purchased, or does that process start before the house is purchased?
Yep. So that's a great question.
And then I have a follow up to that.
Sure.
After.
Yep. The answer to that is the loan itself is like a regular closing, other than the additional paperwork and getting everything done correctly. And then you close, and then the construction happens post the closing itself, so subsequent.
So what about unforeseen circumstances? The contractor says, you know what, for all intent and purposes, this looks like a $20,000 job. He gets into a wall, doesn't have x-ray vision, there's termites in there, and now it becomes a $70,000 project.
Yep. So what ends up happening is part of that, why we said that cushion of $35,000, there are fees and stuff built in there, why it has to be under 35, for example, for the streamline, is there's something called the contingency reserve. So the rule of thumb is if the property is occupied currently, so someone lives there, it's a 10% contingency based on the total cost of repairs. If the property is vacant, there's a 15 to 20%. We traditionally use the 15% with our investors. So what that means is, in simple terms, if it's a $20,000 bid and someone lives there right now, they'll add another $2,000 in contingency reserves. And if it's same example but no one lives there, they'll add $3,000. So the 25%. I'm sorry, 15%.
So Jonathan, that answer your question?
Yeah, perfectly.
All right, great.
Thank you, James.
All right, so the reserves will take care of that. And right, so just to kind of regroup, because this is
it's a lot.
It's a lot to digest.
It
If
really
I'm
is.
driving around, and I've been in the business a long time, and I'm like, all right, let's see if I get this. But let's just regroup a little bit. So, as a consumer, if I'm driving around right now, in the studio audience, you only need 3.5% on this purchase. Down payment of the purchase price that you're buying it for, or the
total
as is value.
The total
the future
cost.
value.
Yeah, no, not the future. It's the total cost.
Total cost of the purchase.
So what
itself.
you're paying. Yep. So it's great because if the big picture again, you get that property that needs a TLC in that neighborhood you want that's underpriced, but you can make it yours, 3.5% down. All the other rules, other than the construction portion of it in that paperwork, follow FHA. So everything else is the same. Same guidelines, same everything else.
So then if I'm a consumer driving around, 3.5%, this could be a gift as well. It could be a gift from a family
Yep.
A relative or your employer.
Yep.
As long as it's a gift, they can actually use all the money could come from a gift.
Yeah, 100% of that 3.5% could come,
It's
as
not
well as closing costs.
It's not
too.
common knowledge out there. I mean, a lot of people think you need 20% to get down, and then on construction loans, when you say the word construction, those are very difficult to find a home for. Construction loans, local banks, I mean, typically they want 20% down. But when you hear about 203K financing, it's FHA. It's an FHA deal, which means it's much more forgiving, easy. You can get much more money to qualify, more purchasing power,
more leniency on the guidelines itself as far as credit go, and higher debt to income ratios, which allow you to qualify for higher usually. So all of that factor into it, and the gift itself and the closing costs can all be given to you. The down payment and the closing costs can be given to you as a gift. So that's pretty.
It's great. Yeah, no, it's a great program, and I know you do a lot of them, and it's it's great to hear from you, like in doing the show. But if I'm driving around, or if I'm in the street, how do I start? Say, this sounds like it's for me. How do I call you, and how do I get in touch with you, and how do you work?
Yep, absolutely. I work at pretty much every single day of the week, like you. I'm easy to reach. You can call me directly at NewFed, 781-241-1234.
Well, it's pretty
I got the best extension in the company. I don't know how.
It took you a while to get a phone.
Yeah, right. So directly, also can be reached James at newfed.com. Very accessible. I can text friendly as well. If you want to text me on my cell, 978-835-4665. First step would be is to discuss the options you have and make sure you're working with a licensed contractor. A lot of times, people know people who can do the construction work, but they're not licensed. So you want to make sure they're licensed, they're aware of the whole process, and aware of when they get paid and how the pay works on the draws and everything like that, because that is crucial. But I'll obviously help them, explain that to them, make sure they understand moving forward what to expect, so there's no loss of communication, and then put them in touch with a realtor.
And some of the things they may come across. So say I'm driving down the street, I say, I really like that house. It needs a lot of work. Don't get me wrong, but if I call that real estate agent and I tell them I want to go FHA financing, they're probably going to say, oh, it's not going to qualify FHA financing.
Yes.
So how understanding that before you make the call and say, well, it's FHA financing, but.
Yes, but it's 2 or 3K. So what that means is that appraisal, or let's just say it's not a full, it's a streamline. That appraisal is going to be subject to the repairs usually on the contractor's bid, and anything else that they deem necessary to make the property qualify under the HUD guidelines. So what that means is if there's chip paint and that wasn't included in the bid, they'll make sure that it's added on there, and so you'll have to
scrape and
paint. Yeah, and that will be added on the contractor's bid in addition to what other repairs. So everything that's going to make the property FHA approved to meet the HUD guidelines are going to be part of that. So
and FHA, just your typical FHA loan, the appraiser goes out there, and if you have, say, a staircase with no railing, they're going to tell you got to fix the railing. So it's a good thing in my mind, because as a borrower, you want to make sure everything is up to snuff when you're going to buy that house, and make sure everything's
absolutely
relevant.
Yeah. You want to make sure the railing's good. You want to make sure and I think there's an unfortunate stigma or false expectations on realtors that don't really know too much about FHA, that think that, oh my God, there's a small little mark on the wall, it's not going to qualify. It's not like that.
Right. I think that maybe back in the day,
it used to be.
Might have been more difficult.
Yeah.
And today it's really loosened up. I mean, chip paint, that's an easy thing to fix.
Yeah, it's not as crucial as they think. It's not as.
But talking about realtors, you must have realtors that really understand this program, really push it. There's a lot of good real estate agents out there that you work with.
Yeah.
That they'll know when they list a house. This is a great one for 2 or 3K.
Oh yeah, and you'll see it. In the remarks, if you see a listing on MLS or Zillow or whatever, you as a buyer get those emails. You'll see it in the firm remarks. It's going to say property won't go 2 or 3K FHA, but it will go 2 or 3K financing.
Right.
So it says it on there. So those are the ones who are more familiar with it, and you'll see that a lot in some cities like Lawrence, where there's FHA is predominant because of the multifamilies. It's easier to get into it. On those foreclosed properties, you'll specifically see that, and then you'll know, okay, so this is the property for rehab.
Right. So that's really interesting. Jonathan,
do you guys have a stable of contractors that you can recommend? And because it sounds like so much of this is dependent on having somebody, not only what we are all looking for, having somebody that's reliable, that's going to do the job that they say they're going to do and do the good quality, but somebody that has the financial capability to be able to ride this out for that small amount of time waiting to get paid.
And that is the big part of it, is the financial capability, waiting for it. And I feel like a lot of that's why I prefaced it earlier and said newer contractors, this may not be for them, unfortunately, because they're going to have to hold on until the draws happen. But we work with, at least 4 or 5 that we know that they know the process, and it's not up to us, it's up to the borrower. But at the end, we just try to give them the best advice we can on, whoever you decide to go with, just make sure that they know what it's entailed and know that there's going to be a time lapse on getting that draw, and that they're okay with that. And the cool thing is contractors that have done this before know it's a guarantee. I mean, that's the thing. Right. It's a guarantee, so they'll wait it out because they know.
But it's like anything else. I mean, you may still want to get 3 prices.
You should.
You should. I mean, give me some stories that contractor priced it at this and they got it at this.
All the time. It's funny you say that. I have one. I was on the phone on my way here from the office, and the same thing. The contractor bid was $42,000 on the one we had.
Yeah.
I gave them a list of 2 HUD consultants. Prior to that, the other contractor that they used had done it at like $53,000. So it's $11,000 difference. And one of the 4 that we gave them, they actually went with. They loved the person. Person knew the 2 or 3Ks. Actually sent back the documents to us with the insurance.
Wow.
And
I know how hard that is.
So to me, I'm glad, and it worked out for them. Saving them money long term.
If someone's going with a streamlined 2 or 3K, can they still use a HUD consultant?
Yeah.
Because a HUD consultant,
it's recommended.
If that's my job as a HUD consultant, I would think I know pretty much everything that goes on in this.
They do,
business.
and it's recommended. Yeah. But obviously, a lot of people like to cut the cost because there's a cost associated with that. But the thing is, on that is they know it, and we've worked with a bunch, and there's a couple. There's one in particular who's so good. He's an older gentleman, been doing this forever.
Yeah.
And I thought, the first time, wow, this isn't gonna. I feel like it's gonna take forever. Had it back, snap of a finger. Yeah. Told the borrower, this is what you need to do. This is the price. Like, unbelievable. By far the best we've ever worked with.
I mean, I just remember my horror story, the 2 that I attempted and the one that I closed, and I couldn't get anything back from the contract.
Yeah, we closed a few last month at New Fed.
I know you've.
And we have a few under active right now.
Oh, you've done dozens. I mean,
dozens, the last year.
Yeah, and I mean, it's not a niche that a lot of people focus on. There's a few people that focus on it, and there's some people that focus on it that don't do a good job, and there's some people that do a good job at it as well. And James is definitely that person.
And it fell on my lap, really. Yeah. What happened is we kind of just, I gave it a tester, and I go, you know what, I haven't done one of these. Let's try it out. And, because I felt like I was missing opportunities, and our company was missing opportunities on potential deals. So I did one, and it wasn't as painful as I thought. And then I got better at it. Over time, you get better. Like, I can see through the crap up front and tell you, no, this is do it the right way the first time, and let's get it done.
And for all your real estate agents out there, I mean, definitely refer your troubled properties. I mean, you might have a property that's really stale. It's on the market. It's a little bit, it's not really moving. If you market it that way, you might be able to sell that property a little quicker. Also, loan offices and other companies. I know you get referrals from other companies that give you 2 or 3Ks. So I mean, if you're a loan officer out there, you're listening to this, pick up the phone, call James, call us. And we'll do that. We'll treat your customer right.
Absolutely, we're here to help, and that's it. Sometimes they just shy away. This is why loan officers in our company will say, "Just do it, James. I know you can get it done."
Yeah.
And, I don't want to weigh down the time, because it is time consumption. But if you've streamlined it down, and we have in our office our LOA Paula, who's phenomenal. Yeah. She may even know the guidelines better than I do. It's unbelievable. So, it's a team effort on getting these things closed.
It's Team Khoury.
The Khoury team. That's right. Team. Check us out on IG and Facebook.
You got it.
Is this something that I could use on my current home, or is this just for a property that I'm about to purchase?
Yeah, you can use it on your current home. Absolutely. You can do.
So you can actually do a 203K refinance.
You can. I actually have not, believe it or not, done it. I feel like people think it's just a purchase thing.
Yeah.
But a couple, actually, you and I have one right now where they're working on getting me
right. They are
stuff.
Doing a refinance. That's right.
But it hasn't gone through yet. They're waiting on things on their end. But
it's going to come down to value. If you have that equity in your home, because if you're in a better position. You could just do it with an equity line, maybe take a credit card.
Yeah.
Or, you got to kind of weigh out the closing cost versus the cost. That
Yeah.
it would be if it was a standard equity line.
Yeah, and the thing is the difference is on these they go to 125% of the value. So it's a
That's pretty slick.
yeah.
Yeah. So
That's
a lot of people don't know that. I
Yeah.
mean, a lot of people don't know that. 125% of the value on a refinance.
On a purchase too.
On a purchase too.
Mhm,
125.
125.
So can you do it? What's like the max loan amount then to do something
County
like that?
limits. So
County
it's whatever
limits.
the county limits are.
All right. So if I'm I want to stress it's primary residence only.
Only, yeah,
if you
not
Yeah,
investors.
it's not investors. Investors, this show is not for you.
No, sorry guys.
This isn't like, I plan on living there. No.
No, you
gotta-
have
this-
to live
you
there.
have to
It's a
live there.
HUD program.
Yes.
It follows the same suit as all the other FHAs, which have to all be owner occupied. There's no ifs, ands, or buts about it.
But there's nothing that says you can't sell it after it's done.
Well, the rule of thumb is on an FHA is your intent is you have to live there for 12 months minimum, and that's the intent on it. So, yeah, I mean, you should. There's nothing that says that you fix it, you move in a few months, and then you decide you want to move. That's they're completely different. But the intent is you want to. But if you were to say
if you're on your
rehab it
third
and
one
sell
this
it,
year,
yeah,
that's
that's a
not
different story.
it's not going to work.
And there's compliance all around this. So there's end investors, end lenders.
And they knock
they're
on
gonna go.
doors.
They're going to do spot checks. Yeah. If they take a picture and like for example, that mailbox is someone else's name, that loan's coming back to us. We're
Yep.
going to own that loan, and
Yeah.
that's not something. That's not something that anyone wants to get into. 'Cause
No.
it doesn't end well. So I mean it's a primary. So
Primary
again, recap:
only.
3.5% down. It all can come from a gift. The contractor really has to be educated or understand the process. Other than that, it's a full FHA deal.
Yep.
Realtors get on board with it, and it's a phone call. So if you have something that if you're a borrower and you're like, you know what, I'd like to go FHA finance, you could tell your realtor. You could tell your realtor to call James, kind of work it out together, and get the house. Like you said, there's a lot of if listings are sitting right now because it's kind of a seller's market, right?
It is. But there are, and if the listing is sitting, it's because it needs work.
Right.
And not everyone has the upfront cash to do it. This is the program for you. You get into that house, you get into the neighborhood that you want, and you fix the house how you want it without coming up with additional cash. It just, to me, it's a no-brainer.
Right,
I mean, it
right,
really
right.
is.
It is.
And
the qualifications are very. It's not that difficult to get approved.
No, it's an FHA, so all the same guidelines that are on a regular FHA, a 203B as they're called, same exact things.
Credit score requirement.
580 credit.
580 credit score requirement. Now, granted, if you have a 580, there's probably got to be a reason for it.
Yeah.
Letter of explanation explaining why your credit might be too
Yeah,
low.
and
It could
then
could be a mistake on their credit report.
It could be a mistake. That's actually the one you and I are going through.
Yeah,
Is a
it's a
refi
mistake,
one. But the thing is that once you get under a 620 on those, there's different guidelines, but they're HUD guidelines that so the debt to income ratios get tighter. They may ask for more reserves. Those are things that come with that territory. But again, that's huge because most of our competitors start at 640,
Yeah.
and we're at 580. So it's a significant difference to get you in there. And obviously, not every 580 is quote unquote a good 580, as
Right.
they say. So. And the other thing is we're not in the business of setting you up to fail, so it's got to make sense and see why you were in that position to begin with.
And what about lack of credit? What if they just don't have a lot of credit?
That's a great question, and the answer to that is FHA does allow 3 alternative trade lines. So what that is if you pay rental history for 12 months, utilities, insurance on a vehicle, things like that. All add up. Cell phones, and the key is on those is you got to pay them so the trick is
On time.
On time. So if your cell phone is due on the 10th of the month, it must be made on it before. It cannot be made on the day after or any day after. Otherwise, it's considered late for the program, even though they'll allow it.
So you can go down and say Comcast and say, print me out the last 12 months of history, and you can see when they paid it and they paid on time.
That's exactly
And
how.
you can do that.
That's the way to do it.
So like cell phone, cable.
Yep, cell phone, cable, car
Utilities.
insurance, rental income is huge.
Utilities.
Yeah, utilities, all
Yeah.
utilities, gas, electric.
You guys really have everything figured out, it sounds like, because every single objection that people may have to wanting to own their own home, I don't have credit,
Yep.
I've got a low credit score, I've got problem credit. So you guys really have different programs that you can look at to be able to get somebody in. Like, you really want to write loans. I love it.
We do.
Well, we try to help people. I mean, that's,
Yeah.
we're only in this business as long as we have because, we truly want to help people get into it's an American dream.
Absolutely. And the thing is, too, is I said this a couple minutes ago. We're not in the business of setting you up to fail.
Right.
I want you to get the house that suits your family's needs, not overextend and live beyond your means. And I want you to do that. Why? Because I want to set you up for success so that you tell your friends and family to call me. So that to me is important. I'm going to take care of you. I always say this, and I know it's kind of cliche. I take care of you like I want someone to take care of my mom, my dad, my brother, things like that. So to me, that's why I'm passionate about
Well,
it.
it's a true testament to why your business has grown so
Yeah.
much because, I mean, it's truly,
I care. That's
Yeah. And that's why things are going well for you. So I mean, I think that's kind of our core vision statement, core values. That's kind of what we are as a company as well.
Absolutely.
And that's why we get along so well.
No, it's true. It's true. We don't want to work anywhere else.
Yeah. So Jonathan, so we're at the 30-minute mark. Why don't we play a little commercial for our wrapping a little commercial here.
I don't have a commercial.
Oh,
I can sing for you.
We might have to edit this one. All right. So, I mean, I think that, as we do these podcasts and we say to ourselves, we say, you know what? We're not just gonna fill up space. If we're done on a subject, I think we pretty much nailed it.
Yeah.
We hit all the spots. We're not gonna keep on boring you with another half hour or 15 minutes to pick up space. But if you have any questions, Easy Money New England's here to give you money making opportunities or saving tips, everything around the world of real estate. So, I mean, with that said, here comes the theme music.
Oh, I love it. Thanks for having me.
And again, James Khoury, 781-241-1234. NMLS number 50872.
Yes.
James, thanks again for the show.
Thank you.
I got to come to your spot right now and put a computer in, so
Let's do it.
right now.
All right, sounds good. Thank you.
Hey, and there's no such thing
As easy money.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.